been through all that. We've got our price to earnings ratio, we've got a company that we know, we picked the sector that we want to be involved in, we've finally picked the share that we want to be involved in. How do we actually go about picking the price that we want to be trading in that share? So now we start thinking about what entry levels we want to be getting into the share market at. A lot of people use technical analysis to help them in deciding when to buy or when to sell a share. On the ASX website, we have a really good section that's going to help you in understanding the basics behind technical analysis. And it could be as simple as looking at a chart of a stock. Looking at periods of time where the stock has fallen down in value, rallied back up, fallen back down, there could be a flaw in the underlying share price itself where that chart has dipped down but rallied back up. It's kind of a flaw where buyers come back into the marketplace. If you can simply choose that level as the buying level for your share in the share market game, you can actually place a limit order in the share market game at that particular price to buy that share. On the flip side, you also want to have an understanding even before you buy that share where you would be comfortable to sell that share if it rallied up in value. So we might have purchased the share at say $20, we've seen the stock price rally up to say 30, move back down, rally up to 30, move back down again, and all of a sudden the stock has a ceiling in its share price there. So we would automatically think to ourselves when we're entering into that share transaction, what would be the value we would be happy to sell those shares? Write it down. You can't put that particular order before you've even purchased it in the share market game, but write that value down. Go back to it and say to yourself, I'm going to sell that stock when you get to that level. If you do sell the shares, don't all of a sudden look back and say, I should never have sold those shares. Move on to the next trade and move on to your next thought in the share market game itself. Some other ways that investors start to think about the stocks that they want to hold in their portfolios is thinking about companies that provide them the opportunity for lots of growth in their share price versus other companies that might provide them with lots of income within their portfolios. A couple of guides to pick a growth stock versus an income stock. We spoke before about the price to earnings ratio. The higher that ratio is, the more the company is expected to grow in the future. So if we think about the earnings per share versus the price of that share, if a company has a 10 times earnings per share ratio, that means 10 times year's earnings are built into its share price. So that company is expected to earn 10 times its earnings into the future. If a company was 20 times price to earnings ratio, it's obviously a lot more expensive, and it's a 20 times price to earnings ratio, the market expects a lot more growth out of that company moving forward. So that helps us in picking which might be growth stocks versus say income stocks that will have a lower price to earnings ratio. When I'm comparing income stocks, we now start looking at dividend yield. Look within the announcement section again of the ASX website, how much is that company paying in dividends? And I think it's actually on the company information section as well. So how much is the company has paid in dividend compared to its share price gives you the percentage of their dividend yield over the year.